let's try and get some perspective going really on the currency front. Peter Mcguire, Chief Market Strategist with FX Global Capital, is joining in right now from Sydney. Peter, good morning. Thanks very much for joining in and speaking to NDTV Profit. What sort of trade are we likely to see as far as the yen goes, particularly with data coming in from Japan this morning about the trade surplus? And also we've got some comments coming in from a BOJ member talking about the scope for further easing.
Well, good morning. And look, I think that it just shows us we've got around about 20 countries at the moment with less than 1% interest rates. And Japan is a classic benchmark of that, running at around about 0.1 for a 2-year. Now, I think that what we're going to see is we're certainly worried from domestically in Japan as far as the value of the yen. I think it's very, very, still overvalued. And we wouldn't be surprised to see further weakening in government intervention to look at, easing that situation for the Japanese. They're trying to naturally rebuild after Fukushima. We've seen very, very patchy, or volatile and patchy move across the Nikkei in the recent months. And I think that they're looking at, trying to get back on place with, a more move and a stronger move to the upside for their equity markets.
Okay, coming to the euro then, euro hitting a 2-year low. It's happening, every other day we're getting these lower lows coming in for the euro. Do give us a sense of where the dollar index is likely to be today, tomorrow, and perhaps for the entire week, with so much of negative news coming in, headlines coming in from the eurozone.
Well, remembering that, if we roll our minds back to May of last year, the euro was sitting just shy of 150. Now it's just a fraction over 120. So it's been a 20% move to the downside. The US dollar index, or the US dollar, has strengthened around about 15% in that time, and naturally the index has been quite strong because the weighting for the US dollar index is about 57% to the euro. Now, when we think of what's going on in the euro land, we've been saying on the program now with you each week that we're looking, sub 120, and we're at that benchmark now. We think probably 118, 117 is achievable by, end of August, mid-September, and forecast of, 115, 112 is a real possibility sometime towards the second half of this year. So there's certainly further downside there in that euro, and when you think about what's happening in Spain, we think that the next shoe to drop, the massive one, of course, will be Italy.
But the euro, though, has, of course, managed to recoup some of the lost ground against high beta currencies like the Aussie dollar. Do give us a sense of where you expect the Australian dollar to trade at, and if there are some levels that perhaps a global investor sitting here in India needs to watch out for.
Well, exactly. I mean, there's talk here that we're going to see a further 100 basis point cut to our rate here over the coming months. So that's put a lot of traders on edge, and they're saying, 102, 101, even parity against the US dollar in the short to medium term, and we could even see sub-parity. Our big resource stocks, if we look at BHP, which is just, one of I think it's the world's largest, we've seen that price, since April of last year, it's off the best part of, it's fallen from about mid-$49 to just over $30. So there's a $20 wipeout off that stock. So it's been dramatic, and our whole market has been very shaky. Our stock market's only up the best part of about 33-34% in 11 years. So it's not a rosy time when we think of our equity markets in Australia.
Words like shaky, cautious, wait and watch, these are words that we keep hearing all the time. We just try and make sense a little bit of all the global triggers every morning. Peter, thanks very much for joining in and giving us your perspective.